Good day, ladies and gentlemen. Welcome to another session of Tuesday's Technicals. With you today, as always, is Max Capital, a trading performance coach and risk manager. Um, I would like to apologize. I don't know how many times I need to apologize at these videos. Most of the work in the company is done by myself. Um, the marketing manager and the office in Australia. So I find myself getting swamped with a lot of work. So I also have to take care of my own clients, the business, the brokerage. We are, by the way, working tirelessly behind the scenes to bring you the best trading experience. Lots of content being recorded as well, which will be shared with you guys in a few days. I'm excited to launch the Real Forex Trader series, where we will be basically teaching people how to trade the easy way. That has less worries, less psychological negative psychological impacts in the market because you have a plan and you're following um, strict set of rules and routines to help you identify those low risk and high probability, high reward opportunities in the market, so to speak. With that said, that's what we're going to be doing today. Technicals Tuesday is all about analysis. We first look at the macroeconomics, how so that we can have a basic picture of the economy, um, the direction, and then we're going to use the technicals to time our entries and exits in the market. We're going to look at the calendar as well to see what specific news are going to come out at what specific time. Without further ado, jumping into trading economics, we have China inflation rate below estimate. So the focus was at 0.4%. China's inflation rate came out at 0.3%. I think that is very good for consumers. Also, Asian markets mostly fall on market caution. Oil higher on demand optimism. The USOIL report shows some very strong focus on oil, and as of Wednesday, it rose above $78 per barrel. China producer prices fall least in 15 months. More good news for the consumer from China, because if production prices are down, that means whoever's going to be selling that product will offer it at a lower price. I'm hoping the consumer index is going to rise up in China as well. Japan producer inflation hits 9-month high. Inflation in Japan has just been going up and up and up, and that is very bad news for the consumers from Japan. U.S. futures steady ahead of the Fed and the CPI. We're going to see that as we have the US30 on our radar to analyze. US 10-year Treasury yields sinks to 4.4. This is negatively correlated to um, the equities markets, so to speak. So we're gonna see how that plays out on the technical side of things, right? Let us check the calendar. Sunday we had news from the European parliamentary elections. Tuesday, which was yesterday, we had a climate change from Great Britain, which came out negative. Today being a Wednesday, we have more news coming out from Britain on the GDP, high impact news. Uh, Later on during the US session, we're going to have core CPI. CPI, I know a lot of traders are excited about this. Um, I'm not that excited about it because it causes a lot of um, it induces a lot of market volatility. However, it works in my favor. The next day, I'm able to tell the real direction of the market after all the noise, right? On Thursday, more US news, PPI, core PPI. And Friday, we have more news coming from Japan, especially based on the Japanese policy rate. We've been expecting the Bank of Japan to intervene on the situation of the Japanese yen. As you've seen earlier on when we were going through trading economics in Japan, that the producer inflation hit a 9-month high. It is time for the central bank or the Bank of Japan to intervene to see if is there a way of slowing down this inflation rate or keeping it at the same level. Now, jumping onto the markets, as always, we are going to start with the dollar index. With the dollar index, we're going to start on a monthly. As always, we'd like to see a high time frame. For me, a high time frame, it is the weekly and the monthly. The daily is sometimes I take trades on a daily. It's not really that high. So as you can see, we're bullish on a monthly or bullish on a weekly as well, probably bullish on a daily as well. So three high time frames are telling us the same thing. So I would say personally with this, I would be looking for more buying opportunities. I think more around here because that's where the big player came in. However, the current market price is all the way up there. So we're gonna look for something that is near current market price. Let's step down to a 4 hour to see how price is trading here. Um, Not bad. Look at the 2 hour time frame to see what can we anticipate. Going back to a daily just to confirm something. I think we might have had a buyer coming in here. Let's step down to absolutely. We had, as you can see, compare these candlesticks with this. These are momentum candlesticks. This is a momentum candlestick as well. So there's a sign that there was a big buyer that came in at this area. So let's see if we can refine that. And look at that. We did break structure. If you are an SMC guy, um, my SMC courses are just beginner level, just to help you get used to a rule-based trading system. So yeah, that's what we have. We broke that structure. I'm gonna delete that. Let's check on a 1 hour time frame. Oh, nice. So we have, there we go. So we've got that. Try to change something over here. Yeah, there we go. Yep, so we have a demand level. So we're gonna wait for the dollar index to come to around 105, 150, 105, 150, somewhere right around this area, and potentially push further to the upside. Small imbalance below that, even a gap down here. So we can not rule out price coming to close this gap right here. So we'll see. We'll see. We'll just wait for price and time it the right way. We saw news on US oil trading above $78 per barrel. Exactly, that's what we are seeing to on this chart rather. We're gonna look at the monthly time frame to try and find an area that we can get in on the market in terms of looking for buying opportunities. I mean, the macro news have already told you the direction. So let's go deeper with the technicals to see where can we take advantage of this. So monthly and weekly are both bullish. Let's check on a daily as well. We are bullish as well on a daily. So once again, we have this big buyer here. I would I would look for an area of demand here at that rally base rally, and we have a drop base rally here. So that's also another area of demand that we have on US oil. However, um, once again, current market price is all the way there. Let's see what we can make out of this. Check on a weekly. Um, on a weekly, we might potentially be going for $81 per barrel, or just a little bit above that. So back to the daily. Yep. Let's step down to even smaller time frame, breaking down the chart bit by bit. So let's see, what do we have here? What do we have here? Absolutely, there is an area of demand right there. There's an area of demand right there. But it is quite hard to just go with this one when we also have another area all the way down here. Let's look at one smaller time frames rather. We do have an area of demand here, just refining those areas. We do have an area of demand here and this one. So it's just a matter of, I think this one down there is much more viable. Yes, there's a big buyer that came in here, but we have an area of demand there, or an area where we have unfilled buy orders. So I'm not sure what's going to happen with the US oil or WTI commodities futures. We will wait and see. We'll wait and see. I had a friend of mine from Prague who identified this big player here and said there is a potential area to buy there. We will see. We will see. We will not rule out the possibilities. We'll just watch out for price movement and act in the right manner when price comes to our areas of interest. Yeah, that's flat trading here. This is what we normally try to avoid, fair value area. So I wouldn't trust any area of demand that's sitting right here. But this right here, this is something. We're up to something here. We're cooking. So if oil can drop to all the way to $73.500, $73.5, somewhere down here, I would be interested in taking a buying position to go all the way to $84 per barrel. We will see. We will see. We do not have any crystal ball to predict the future. All we do is try to follow a proactive approach in our preparation and understanding what's happening behind the scenes. When I'm talking about the big player, you have to identify an area where there was a big player. It might be a seller or a buyer. Find where they got into the market. There might be some unfilled orders there, and that's where you're going to find an area of highest probability. That's what trading is. If you do not have a system that's going to bring about order in this randomness, you're going to suffer. You're going to suffer. So on a sorry, on a monthly time frame, we are bearish on cable, which is basically a nickname for GBPUSD. We are bullish on a weekly, but I would like to follow the higher time frame direction and look for selling opportunities since the monthly is bearish. So what I normally do is I find a big player, right? From the current market price, I go towards the left, and this looks like a big player. And where did that big player come in? Right here. So that's where I'm going to try to find um, potential areas to sell from. And in terms of targets, opposite, I'm going to target this area here of 1.25500, selling at 1.2800 with cable. We're on a daily. Let us look at 4 hour, see if we present something different for us. I also like this area because it is above this fair value price area. So it would be nice to see price going up there and dropping all the way down. Also, because we're anticipating the US dollar to be bullish, I think this would make much more sense, because if the US dollar is bullish, and we're going to see some more bearish movement on cable. Yeah, that's it. Cable, a nice risk reward ratio. I mean, if you're gonna take this, pretty much, I think you're gonna get a 1:7. Yep, 1:8. That's a nice risk reward ratio that you can get from this setup. Actually, one of the best setups we've had so far. Let's check the Swiss franc against the Japanese yen. Starting on a monthly again. We're looking for the big player, right? Always look for the big player. That's a major key. That's a major key. So we're bullish on a monthly, we're bullish on a weekly. Let us see on a daily indecision. However, we've got a potential area of we can sell from up here. So um, however, I am not really keen on selling here. Why? Because the weekly is bullish and the monthly is bullish as well. Let us see what we have here on a 4 hour time frame. Right. Big player, right? Look at these candlesticks. We've got a big player here. So what do? We scale down to lower time frames and find a nice area of supply to sell from. So still trying to find a nice area of supply that we can sell from. Boom, got one. So refining our zone, we've got this. Why do we choose this area? It's because of how price left the zone, right? It was quick, almost 90 degrees to the downside, and then we had this fair value area. So what normally happens is with price, this is a mini lesson. What normally happens with price is that price is going to come down and play around, probably come down and then go up again, play around, come up and go down. So there is this area that you need to notice. This is fair value area. This is where everyone is agreeing on price. This is where most of the trading activity happens. You do not want to be here. You want to be here at the extremes. Now, I know that the industry and the gurus will tell you that you shouldn't try to catch tops and bottoms. Well, the industry is doing it. It's possible. So what do you do once you find fair value area? Right, this is fair value area. So once you find fair value area, look for an area of supply above it or an area of demand below it, because that is where the big players came in, right? And what's nice about finding these areas where the big players came in is that once price gets to that area, it's just going to Sorry, I'm trying to pick this tool. There we go. Get to that area and just move the other way. Why? Because we have large unfilled orders here. So what moves the market? It is filled orders. What you see here, it is orders that are filled. There was an agreement between a buyer and a seller. But somewhere here where the big seller came in, there is an unfilled order. That's what causes the markets to turn. So it's a lesson for another day, but always once you find fair value, look for an area of supply above and an area of demand below. This is a big fair value area. With that said, where would my potential supply be? Somewhere here, but this is can also be classified as fair value. So somewhere down here would be a nice area to target on the Swiss franc against the Japanese yen. Now let's look at other markets. We have the crypto market here, Bitcoin. Let us see where can we take advantage of Bitcoin. In certain groups with friends of mine, we were discussing if we're going to see 60,000 or 63,000 Bitcoin. We are all not sure. Looking at the monthly time frame, we are in an indecision form, but it looks like buyers tried to come in and push price higher and got rejected. Hence, we have a lower wick from the top. It means we have some aggressive sellers coming in somewhere there. Right. Experience. Bearish on a weekly. Speaking of experience, once you give yourself enough time with this, it won't be that hard to identify where you should buy or where you should sell. Also, just keep it simple. Buy low, sell high, not in the middle, right? This is fair value, right? This is what I was talking about. This is fair value. It would be nice to buy here. But fair value is subjective to the time frame that you're on, right? For our time frame. See, oh, before that, but we can go through it. Let's look at price going to the left without cutting through price. So we have big players here going further to the left, and then we have now this big player here. So he came in here. So it's a sign that we might have an area of supply there, right? Stepping down to 2 hours time frame. So nothing for now. And then voila, we have a nice area of supply over there. So with Bitcoin, it is possible that we are going to go back to 71,000. But by the look of things, it looks like we might get to 71,000 and push all the way to the lows of 62,000 or 63,000. So these are my outer limits, if you may, for Bitcoin. This also looks like a big fair value area. So buying somewhere here, 62,500, 62,600 would be more ideal if you want to stack up on your Bitcoin. I don't know whether it's good news or bad news for the other altcoins. Now let's look at the last asset class here on the equities market. We have the Dow Jones US30. Now, according to our trading economists, US futures steady ahead of Fed CPI. US stock futures steadied on Wednesday as investors brace for the Federal Reserve interest rate decision in May and more news on the consumer price index. So on a monthly, we are in an indecision area, clearly shown by that doji. Um, bearish on a bearish on a weekly. Let's see on a daily. We are in an indecision. Looks a bit bullish, but it's more indecision. So let's step down to 4 hour. 4 hour. Try to find a big player. Um, going back with price, seems like we have a big player here. Going back, we have a big player here. So one would say we have we also have a big buyer here. Yes, we had a big buyer here, but as soon as price broke below the low of that point, that was a sign that the sellers in this area are more than the buyers that were able to push price strongly to the upside with this just one candle. So here there is a seller. We need to find that seller. Let me go back to daily a bit. um Come back to daily. I think we need to find our seller from that area. Stepping down to a lower time frame, I think I have found me a seller here on US30. So US30, it would be nice to see it come back to 38,800 and then drop back down. As far as how far down can it go, I think this will be an ideal place to take your profit. 38,200. So that is what I have on the Dow Jones, or that's what I have rather for today, for you, on on these markets. So yeah, there we go. We're looking sell to sell the US30, negatively correlated to the US dollar, as you'll see shortly. So that's what we have on US30. Let's start fresh. So we're looking to buy the US dollar, which uh, basically speaks to the correlation, negative correlation of the US dollar to the US30. We're looking to sell the US30, we're looking to buy the US dollar. So we're good. We are aligned. US Texas oil, we are anticipating to come back to 73,200. There's also an area here, like I said earlier on, and there's a friend of mine who was showing me this area here where a potential buy exists on US oil. So if we can drop down to 77,500, he is looking for a buying opportunity here. I don't know if that's viable for you. You can also look to take that position. I'll try it probably with 20% of my normal risk, just to see, or to avoid the feeling of missing out on this setup. So that's what we have on US Texas oil, on US oil or crude oil. So cable, which is the British pound against the US dollar, we're looking for selling opportunities. We're going to sell at 1.28. Swiss franc against the Japanese yen, we're looking for more bearish movements as well. Bitcoin, we're looking to sell at 71,000 all the way to 63,000, or buy at 63,000, because price can move either way. It can go up, it can go down. We do not know that, but we know that we're gonna pay attention once price gets either to 63,000 or 71,000. As far as Bitcoin is concerned, USD is very now. That's it from me, ladies and gentlemen. I hope you enjoyed this one. Yeah, have a look, do the markups on your own charts. Daily live trading sessions are coming up. The team is working hard. Like I said, behind the scenes, we are making sure that we will have the right equipment for live streaming, right posters and whatnot, right content planned ahead of time, so that when we get the green light, we just deliver. With that said, ladies and gentlemen, thank you so much. See you on the next one. Cheers.